What's going on? Ryan Thompson, the Assumable Guy, and this is the Assumable Guy Show. All right, so you know what an assumable mortgage is. You understand the equity gap. If you've been listening to our show, you know how VA loan works. Now it's time to talk about what actually happens when you decide to do one of these. I'm not going to pretend this is easy. It's not. The process is longer. The banks are annoying, and there's more friction than a traditional purchase, much more. But I want to make this super clear. The returns are worth it. And if you know what to expect going in, we all know expectations are everything. It is totally manageable. And you find a good agent, they'll walk you through the whole process. Step one, you find a property. Maybe it's on my list. Maybe it's on one of the assumable mortgage websites like assumableguy.com. Maybe your agent found it. You look at the rate, you look at the equity gap, you look at that monthly payment compared to what you'd pay on a conventional loan. The math works, and you say, hey, I can afford that equity gap. I like the monthly payment. Let's move forward. Let's go see the house. We go see the house. You like it. It works. Step two, we write the offer. This is important. It's not a regular purchase contract. There's some important nuances. I put all the correct assumable clauses in there, the deadlines in there to protect you, and these clauses guarantee we're getting the rate and the payments that you expected. So all that information that we have on the loan, it's public info, but sometimes that public info is wrong, and so we are putting offers in there with all of that info, and we're making sure that that is the rate that we expect. My advice, when we make an offer, full price. You are asking a seller to go under contract for significantly longer and to give you their low rate, full price offer. Here's why. Seller's doing you a huge favor. They're going through that longer closing. Like I just mentioned, if it's a VA assumption, they may be giving up their entitlement, and they're handing you an interest rate that's going to save you hundreds of thousands of dollars. These are competitive deals. Trying to save $5,000 or $10,000 on the purchase price and the down payment when you're saving $390,000 in interest over the life of the loan is short-sighted. At the end of the day, you decide what we offer, though. That's step two. Step three, the seller accepts, and the assumption process begins. Here's what happens. The seller is going to call their lender and say, hey, selling my home. We're going to do it via an assumption. Then they're going to add you as a third-party authorized user on the loan. The assumption processor, which is the company we hire to push through these, is going to call the lender on your behalf, and they're going to say, we got a buyer. Here's the paperwork. Let's go. The lender sends back this massive packet. It's basically a loan application. You fill it out, income docs, tax returns, bank statements, all the standard stuff. And sometimes you got to print it out, fill it out by hand, scan it, and even mail it. Sometimes. Usually in 2026, they make it a little easier. These sellers, these banks, let me talk about this for a second. They are trying to add friction to the process. They want to frustrate people. They're adding friction on purpose. And you got to think about it from their perspective. They've got a 2.5% interest rate loan on their books. Maybe it's a $500,000 loan. And if they let you assume it, they're probably stuck with it for another 25 years. But if they make it hard for you and that deal falls apart and the home sells the traditional way, that loan gets paid off. The bank can reload that money at 6.5% or 7%. They would much rather do that. They also don't have any new loan origination fees on an assumption. They'll charge you some assumption fees, but they make significantly less money than when they originate a new loan. And so they have no incentive. They have no reason to make this process efficient or easy for you. And they're just not focused on it. So it takes longer because they don't make money and they have no incentive to do this. But they have to. It is legally required for them to do an assumption. It's in the FHA VA paperwork. And if they do not do it, they will get in legal trouble and they will lose the ability to service FHA VA loans, which is oftentimes more than half of their business. The VA actually recently sent out a circular reminding lenders, you must allow assumptions or you will lose the ability to service these loans, period. So the banks have to do it. They're just not going to make it pleasant. And that's why assumption processors exist. What's an assumption processor? Well, they are worth it. Let me tell you that, and I will not do any of these deals without an assumption processor, and you shouldn't either. There are companies whose entire job and business model has started when these assumptions got popular again, and it is to help push through these assumptions with the banks. They know the servicers, they have relationships, they know the nuances and the rules. They know where things get stuck. They know what to submit and what not to, and in what order to tell things to the bank. And when the bank pushes back to say, hey, you're required to do this, bank, Let's get it done. There are a few companies that do this. Rome is one, Yumi is one, Assumption Solutions is one, and AssumeList also is doing this. And these are across the nation. They work to help push through these assumptions. They've done hundreds of them. And the cost is usually anywhere from close to $2,000 aside to 1% of the purchase price. So on a $400,000 home, it's about $4,000. And I know, another cost. It sounds like a lot, but when you are saving over $1,000 a month on your mortgage for 30 years, $4,000 is nothing. And if you do not hire someone to help you walk through it, it might take 6 months and everyone gives up and it's not done successfully. And so hiring somebody to make sure that this important and amazing loan is going to get transferred into your name successfully and closed is well worth it. You should pay it every time. Another important detail about assumption mortgages is the timeline. It takes 45 to 90 days in most cases, and some servicers can do it in 30, which is about the same as a normal closing, but you're really looking at like the 60 to 90 day range. And servicers are getting a little better, and that's getting a little quicker every day, but still 60 to 90 day range is what you should expect. And during that time anyways, you're doing all the normal home buying stuff. You're doing the inspections, same as you would on a normal purchase. You make sure the house is good. You verify the seller's mortgage statement to confirm that rate and balance is what you expected. And then the assumption processor in the background is doing all the heavy lifting with the bank. Your job during this period is to stay on top of your paperwork and give that assumption processor answers and paperwork they need as quickly as you can, because the banks take a week to respond. And so you have got to, every time they need something, you got to be on it. So have your paperwork ready. Now, sellers, here's what this means for you. The process takes longer. Normal sale closes in 30 days. An assumption might take 60 to 90. But here's what you're getting in return: stronger offers. Buyers are willing to pay full price or even a premium because the rate is so valuable to them. And a pool of buyers who can actually afford your home, because the payment is $1,300 less per month than it would be on a new loan. There is so many more buyers who can afford your home. With rates where they are, a lot of buyers are priced out of your home at 6.8%. But at your 2.5% rate, they can actually afford it comfortably. And so your assumable rate is going to expand your buyer pool and increase competition on your home, which means you'll sell it quicker and for a higher price. And so my goal as a listing agent is to get you the best price possible and sell it as quickly as possible. Obviously, if those are your goals, which most sellers it is. All right, let me talk about now what can go wrong. First thing, the buyer might not qualify. Their credit or income doesn't meet the lender's requirements. The assumption can get denied. And that's why I have buyers pre-qualify with my lender first. This lender is also an assumption processor, so they understand how assumption underwriting works, which is different from originating a new loan. For example, one big difference: you cannot count rental income unless you've had it on your tax returns for 2 years. There are little things like that, and you want someone who knows the rules. The bank could delay beyond the contract deadline. This happens all the time. We build in extended timelines for exactly this reason. The seller could get cold feet and say, I don't know if I want to do this anymore. I don't know if I want to extend it. And then you're trying to force the seller to give up their VA entitlement. That's not going to happen. So good communication and education up front prevents most of this. And then here's my track record. I have had no buyers get into this process that couldn't close, except those who terminate early because of repair issues, inspection issues, etc. But when the right people are on the deal, these close. Buyers want that rate, and they're going to do what they need to make it happen. So to sum up this whole thing, find a property, you make a strong offer, the seller accepts, assumption processor starts working with the bank, you do inspections and due diligence, the bank reviews your application, and 45 to 90 days later, you close. And now you own a home with the rate from 2021 in the 2s or the 3s, while everyone else is getting one in the 6s. You're trading a couple extra months of patience for $390,000 in interest savings, years less of working, an awesome vacation every year with your family. I will take that trade every single time. I'm Ryan Thompson. This is the Assumable Guy Show. If you want to see if an assumable mortgage makes sense for you, whether you're a buyer or a seller, hit up assumableguy.com or grab 15 minutes on my calendar. I'll run the numbers for you. No pressure, just math. See you on the next one.